My name is GIna and I am a Michelangelo of money. I wrote a book called Bookkeeper School, Pre-QB, How to Save Tax Dollars. And today, we're going to figure out how to save tax dollars legally on business write-offs. I'm really into art history, so I'm going to refer to tax buckets as buckets. So unless you actually sell cherries, grapes, and peaches, these are now office supplies in your refrigerator that might need to have some office space in your chart of accounts. And the chart of accounts is what I refer to as buckets. These are the buckets with the words next to them for the tax return. It starts with advertising, car and truck expenses, commissions and fees, contract labor. They happen to be alphabetical for the sole proprietorship. If you're an S Corp or a C Corp, you get the same words, they're just on another page and separated differently. But these are the vocabulary words that the tax people like. So these are what I call buckets. We're going to come back to this slide because it makes more sense after the PowerPoint. This is an idea for everyone. It's called a health savings account. It's 100% tax-free money going in and 100% tax-free money coming out as long as you use it on health, and it never expires. Whereas the flexible spending account is something that would be a company cost, and it expires typically in 1 year, a year and a half, or 2 years. It's called use it or lose it. A health savings account generally has a very small interest rate, but again, it's never use it or lose it, so if you're young and you put in money, it grows over time. Meals and travel are something that business people do. Different years tend to have different laws. Please refer to the year you're in, but let's discuss. Travel expenses you can deduct. Dry cleaning at a hotel is a little expensive, but it counts. Tips you pay for would be something that now are done on Uber app, but at some point, if you actually give the baggage guy a tip, what are you going to do? Well, the hotel generally has a pen and paper, and you can write that down. So what do you write down? You write down the amount, you write down the date, you write down the destination with maybe a description, and the rest is not applicable. So at some point, let's think about a receipt. When you look at your bank statement, it has the date, it has a place, and it has an amount. And if you're looking at the 7-Eleven receipt, it doesn't say Slurpee. So sometimes a receipt isn't always necessary, and you can write it down if you don't have one. Gifts are on here. The typical gift is up to $25 per gift, but if you put your logo on it, sometimes it can become an advertising expense. Let's talk about the difference between ordinary and necessary expenses. The IRS has defined all business expenses into 2 words. An ordinary expense is one that is common and accepted in your trade or business. A necessary expense is one that is helpful and appropriate for your business. An expense doesn't have to be required to be considered necessary. So, decorations are very ordinary in a business expense. Flowers are a very appropriate business expense. Continuing education is a very appropriate business expense. Food and beverages cannot be lavish or extravagant. Let's talk about promotional meals. QuickBooks invented this promotional meals chart of accounts that says use promotional meals to track how much you spend dining with a customer to promote your business. The meal must involve a current or prospective customer, client, supplier, employee, agent, partner, or professional advisor with whom you could reasonably expect to engage in to do the course of business. You or one of your employees must be present when the food or beverages are served. Meal expenses, you can have the actual cost, you can have the per diem rate, and here's an IRS government page saying the deduction for unreimbursed meals is generally subject to a 50% limitation. I'd rather have the actual cost. Let's talk about meal breaks. In the state of California, every person is their own employee. So they need a 10-minute break for anything over 2 hours. So generally you need 2 10-minute breaks. Maybe you need a sip of water while you're on your break. The first meal period must be provided no later than the end of the employee's 5th hour of work. If you actually have employees, the employees can sue you for 1 hour per minute worked after 5 hours. So let's give them a meal break, and are you paying for it? QuickBooks records the date the check was written. Most people are a cash basis business. You can become an accrual basis business by asking on a piece of paper and the government will say yes. But this is where I say QuickBooks records the date the check was written. Please see me for more details. Employees are the worst thing that ever happened to a company, but at the end of the year, Uncle Sam isn't going to be as grateful as your employees for a bonus. Please look at the books and see how much money you have in your bank account, and please consider giving the employees you do have the bonuses that they do deserve. Continuing education is something that you can pay for as a business owner. It would be education moving forward, not backwards. If you hire your children, you could put their money into the 529 plan, which is a college savings fund that grows like the health savings account and can be used for education. If you put the child on payroll, you can put more than $14,000 into their 529 plan in the same year. Let's discuss the auto. Auto includes gas, oil, repairs, tires, insurance, registration fees, licenses. I don't know how many licenses you need to drive a car, but if you're a truck driver, more than one. Depreciation. If you're depreciating the car, it's over 5 years. Otherwise, we're going to pay for the lease payments. Parking and tolls go under travel. Charitable contributions don't include your time. Charitable contributions go on your personal tax return, not your business tax return. It is not a dollar-for-dollar expense, and it has nothing to do with your business, truly. Please talk to your CPA about charitable contributions. Retirement contributions, please talk to a financial analyst about retirement contributions. We are now in the legalities of anyone over 5 employees has to have some kind of retirement set up. I personally like the simple IRAs because they don't cost any money. But at some point, if you do open up a 401k, you can't ask the people to close the 401k until everybody's taken their money out. So at some point, some of these become costlier than more of a savings machine. So please talk to a financial analyst about what is a good retirement plan for your company. The ATM machine for your bank account is really not a good idea for you to use. Do you pay the maid in cash? Do you take $100 a week out of the ATM for the maid? Please write maid on the ATM receipt. When you do take money out of the ATM, it's called a capital gains distribution possibly. Please talk to your CPA about the rules of taking your own money out of the bank account of your company. I appreciate that you've earned the money, but it's taxable. If you're going to take the money through payroll, an S-Corp is the only one that needs to pay yourself fairly and reasonably. This is where I say, how many children do you have? Are they under 18? And do they work? And do they work for you? Please talk to your CPA about how much your children are worth through payroll, tax exempt. Payroll for yourself costs you both the employer and the employee taxes. So this is a current year-to-date $50,000 current and year to date. On December 21st, 2018, we gave somebody their payroll. Social Security on the employer and the employee side are both $3,100. Medicare is both $725. By the time you get through the taxes on the employer side, to give yourself $50,000, it costs $54,000, and you're only going to get approximately $30,000 out of that by the time taxes come out of the employer and the employee side, and the state and federal taxes as well. So at some point, what kind of payroll are you giving yourself? This is business use of your home. Line 18 says insurance, line 19 says rent, line 20 says repairs and maintenance, line 21 says utilities, line 22 says other expenses. Other expenses might be the gardener on the way to your house. You have to walk through the garden. One way to write off the home office is to take the square footage of your home and the square footage of your office. This is where I'd like to argue about, do you have a bathroom? Let's include some square footage of that. At some point, did you walk away and go to your refrigerator and get some of that water and snacks that you have for those break times, and then possibly go sit on your couch? So at some point, we're going to need to include more square footage than just you sitting in front of the computer, because 8 hours a day, at some point, people have break rooms in their office. That's called normal. Most people have water and coffee and tea and snacks in their office because it's more convenient for them to stay in the office, especially with COVID outside. So this is the first way that you could write off the home office. The next way is to write yourself a check from your company to yourself. This will exclude the Medicare and Social Security tax, but it's still income, and you will pay taxes on that. The third way is to write a check from your company to the landlord for the designated amount that you would like from the company. Write the landlord 2 checks, one from your company, one from yourself. Pick a number that you're comfortable with, and you can do what's called a sublease. And you take a piece of paper and you write down the date and you sign it, and you say you're subleasing your apartment to your company for a specific amount of money, and that becomes a legal document. The fourth way is called the Augusta rule. There's a special rule if you use a dwelling unit as a personal residence and rent it for fewer than 15 days. In this case, do not report any of the rental income and do not deduct any of the expenses as a rental expense. This is where most of my clients start renting out their kitchen table for the office meetings that I have, and we come to their office once a month, and we sit around the kitchen table and we pull out the reports, and we have the profit and loss, the balance sheet, and the statement of cash flows, and we go over the financials. Let's go back to the buckets. It's good to know the names of the broad buckets. Advertising. Now let's think. The Super Bowl costs a lot of money to be in as an advertiser. So advertising can be a large percentage of your income without the IRS blinking. Car and truck expenses. The box seems to be a little bit bigger, but it's still one number. And again, we now know that it includes several numbers, such as depreciation, gas, repairs, did you buy tires, commissions and fees and contract labor. If you put something in this box, you really need to think about 1099ing these people. You should think about 1099ing anybody that's not a business in any of these boxes, but especially in box number 10 and 11 for commissions and fees and for contract labors. Depletion. I hope I find a client one day with gold or emeralds underneath their land to deplete, but that's not something I've found yet. Depreciation and Section 179 expense. This box seems to be the biggest on a tax return, and I will say that it's debated every year, but at some point we can, what's called depreciated in 1 year versus the long-term depreciation. Please talk to your CPA about this box. Employee benefit programs include your workers' compensation insurance, please understand that you're going to need workers' compensation before you do payroll. Insurance. This line says other than health. Please refer to which year you're in to discuss where your health insurance goes for the company with your CPA. Interest is something that you cannot have more than 30% of your income as, so you're not allowed to run your company on your credit card. But you can have mortgage paid to the bank interest and credit card interest and other interest. Line 17 is legal and professional services. Technically, this is where your CPA and your lawyer goes. Different people have business consultants. Legal and professional services is a very broad term, and my lawyers fill that box up very easily, and luckily my people that don't have legal problems don't fill that bucket up very easily. So office expense and office supply are actually two different buckets. So let's define office expense versus office supply. So an office supply could be a calculator versus an office expense would be the decoration. Which one is necessary and which one is ordinary. So office expense is what I call the ordinary box, where office supply is the necessary box. And so far, they still haven't put on software. Software is an office supply now. And software can become very expensive for different companies depending on what software they're running. So line 19 is pension and profit sharing plans. If you're a family-run company, then I really like this box. If you're not a family-run company, I don't really recommend McDonald's getting a pension for the company. Rent or lease. You can rent vehicles, machinery, equipment. A porta potty is actually about $100 a week for the construction workers that are too far away from a bathroom reasonable enough for them to get to. And then other business property. Some of my clients have an office in Las Vegas so that they can write that off as well. Repairs and maintenance. Now, I appreciate they sell pink cotton candy at the line of Home Depot. So if you go to Home Depot, I'm going to put that in repairs and maintenance. Maybe you were eating that as a snack while you were repairing that. So office supplies, again, includes all of the software as well. Taxes and licenses. Companies don't pay your taxes for you, you do. This is the box where it costs $800 to become an LLC. What licenses do you need to be here? It costs $25 per company to be registered with the Secretary of State, $30 if you'd like one mailed to you. Now, let's talk about travel meals. So at some point, as soon as you leave the front door, you've traveled. So if you buy a pencil, just because you've traveled, I'm not going to put that in travel. I'm still going to put that under office supplies. Maybe once you left the front door, you forgot the office supply. But some meals are going to land under deductible meals down here. And then travel obviously includes any incidentals that you would need while you're traveling to get there, such as the tips for the porter and the taxi cab that you might have taken. Utilities. Please understand there's a lot of utilities that go into running a business. The lights need to be on, the internet needs to be on, the telephone needs to work. There's quite a bit of things. You need to have running water. Does that include in your rent, or is that something you pay for as well? So what are your utilities? Wages has its own line. If you're an S Corp, officers' compensation stands out. So please separate that in your bookkeeping for the CPA. Then there's some other expenses. And other expenses might be continuing education, dues and subscriptions to your Pandora. Businesses aren't really legally allowed to listen to the radio. Have you ever been to McDonald's and heard like a Jack in the Box commercial? You don't really hear commercials at a business because they're not legally allowed to play the radio. That's why Pandora and Spotify were actually invented. If you have any other questions, please come in and see me. My name is GIna and I am Michelangelo of Money.